Hello everyone, I'm Man Yi from the University of Hong Kong. Today I'm going to make the presentation to explain why you should buy Swatch Group stock. Firstly, we look into the history of the group's relative wealth chart. Though the CFROI was always higher than the discount rate, the stock price decreased during two circle periods despite the general upward trend. This may be related to the low or even negative asset growth rate in those two periods. Next, let's turn to the drivers of the CFROI. The sales growth charts show a clear cycle of around 6 years, which may be caused by the macroeconomic and the industrial development cycle. On the other hand, the margin and asset turns had very good and stable performance in past years. While the asset turns were stable at a lower level after 2002, the profit margin was in an increasing trend. Together, they caused an increasing trend in CFROI before 2000 and a lower but relatively stable level afterwards. To forecast the future cash flow, we also have to take the future Fed into consideration. After 2000, the CFROI has low volatility. This pattern implicates a slow fade of the company. The company is no longer in the fast growth phase, but in the future, it's very likely that it will maintain the current level of economic return for quite a long time. The Cretid Suisse analyst forecast proved my opinion. The forecast returns of the few coming years are quite stable, nearly 10%, higher than the average 6%. Besides the CFROI, we also need the market discount rate to get the warranted price. With a large market capital and low leverage rate and default risk, the group has a lower discount rate and thus a higher warranted price. The warranted price calculated on May 26 was 49% higher than the real stock price. The diversified brands of watches and jewelry bring the group more consumers of different incomes and tastes. In general, I believe that the future development of the Swatch Group will be very optimistic. However, investors should also pay attention to potential risks. Back to the price chart, the warranted price tracked the real price closely in the past years, despite in 2001-2002 when CFROI peaked. Since 2011, the warranted price exceeded the real price, and the spread in the recent years is becoming larger and larger, meaning the stock is underpriced. Today, the spread is large enough with a high safety margin, implicating a good opportunity to buy in.